The Philippine Stock Exchange is the only equities exchange in the country. It is one of the oldest stock exchanges in Asia, tracing its roots from the establishment of the Manila Stock Exchange in 1927 and the Makati Stock Exchange in 1963. The two exchanges were unified in 1992 to form the PSE we know today. It currently maintains a trading floor at the PSE Tower in Bonifacio Global City, Taguig City. The PSE is a venue for companies to raise capital for business expansion. As of end 2020, there are 272 listed companies at the PSE. The PSE also serves as the marketplace for investors looking for equity-based financial instruments. It helps investors build their wealth as stock investments have the potential to grow over time. Investors make money in the stock market through price appreciation and dividends. The PSE helps maintain a fair and transparent market through its continuing disclosure requirements for listed companies. Meantime, its independent subsidiary, the Capital Markets Integrity Corporation, oversees and regulates trading participants. Trading at the PSE is open Monday to Friday except on holidays. The PSE currently observes shortened trading hours from 9:30 a.m. to 1 p.m. Investors who would like to invest in stocks will need to open an account with any of the 126 accredited stock brokerage firms. Visit the PSE website at www.pse.com.ph or follow our official social media accounts to know more about investing in the stock market. Welcome to our webinar. This is our first webinar for 2021 and first of a series of webinars that we're going to be doing for the investing public. So we thought of kicking off the year with a review of what happened in 2020. How did the market perform during the pandemic year, and what lies ahead for 2021. So indeed, a very, very interesting discussion is for you this afternoon. We have a great lineup of speakers. Of course, from the Philippine Stock Exchange, we have our very own Miss Mica Cu, and our guest speaker from BDO Unibank, Mr. Jonas Ravelas. Our first resource speaker is my colleague here at the PSE. She heads the Corporate Planning and Research Department of the Philippine Stock Exchange. Her group is responsible for determining the composition of the PSE index and the sectoral indices, which are reviewed and recomposed every 6 months. She also managed a number of keystone PSE product development projects, such as the dollar-denominated securities, the PPP infrastructure listing, index reclassification, and short selling. So today she will give us an update on how the market performed in 2020. Ladies and gentlemen, please help me welcome Miss Mica Cu. Good afternoon, Mica.
Hi, good afternoon, everyone. I hope I live up to the introduction, the very generous introduction of John. Allow me to share my screen. So, okay. So, my topic for today is 2020, the year in review. So, I'll be giving you a snapshot of the market's performance in the past year. So, through several stock market indicators. And then I will also be sharing with you some of the technologically related initiatives of the PSE. So this would be very apt for the times that we have now, since we're all stuck at home and just doing everything online. So let me begin. This is just a graph showing you the PSEI's performance over the past year. So the PSEI, for the benefit of everyone, is a 30-member stock market index, which represents the market's overall performance. We began the year with at around 7,800 level, but then several occurrences happened, such as like the Taal volcano eruption, and also leading to the declaration of the WHO that COVID is indeed a pandemic. So this was back in March, I think specifically March 11. So during this time, the market actually declined by about 40% from the year end close in 2019. So it triggered the circuit breaker of the PSE three times. So to elaborate, the circuit breaker is a 15-minute trading halt whenever the PSEI or the stock market index declines by at least 10%. So this circuit breaker was triggered three times on March 12, March 13, and March 19. It was on March 19 when the PSEI recorded its lowest close at 4,600 points. So this was when the lockdown that President Duterte got affected. So towards the latter part of the year, actually, that was when the index picked up. So it picked up because of the Pfizer announcement that there's already a vaccine for COVID. So from there, the investor sentiment actually improved and leading to a 7,100 point close in at the end of 2020. So this is just about 8.6% lower than what it was in 2019. However, year to date, as of today, January 29, we're back at the 6,600 levels because of deeper than expected GDP contraction, as well as the new strain of the virus. So this brought some uncertainties again to the market. So what did we do as the PSE to address these volatilities posed by COVID-19? So first, we temporarily shortened our trading hours. So trading hours at present is only up until 1 p.m. Previously, it's a whole day trading until 3:30. This was to initially to align with the curfews that are put in place by the government as well as the operational schedule of other market providers. We're still studying when the market will go back to its normal trading hours, and for sure we'll make the necessary announcements for that. Second, we also implemented floorless trading. So during the ECQ, we weren't allowed to open our trading floor. But after reopening in June, when GCQ came, we just implemented stricter safety standards for our trading participants. And we only allow one trader per trading booth. In terms of rule amendments to address the volatilities, so we amended the rule on static threshold. So static threshold is the allowable trading band for when you trade a security. So, for example, a stock can only be traded with an upper limit of 50% and the lower limit of 50% also for when you trade your transaction. So with this amendment, we reduced the lower static threshold to 30% from previously 50%. So this limits the stock prices volatility. I mentioned earlier that we had triggered circuit breaker three times in March, but this one is only one level at 10% decline in PSEI. So in the same month, we actually implemented two more levels. So this is at 15% decline with a 30-minute trading halt. And at level 3, a 20% decline in the PSEI with a 60-minute trading halt. Some other stock market indicators that we have are domestic market capitalization. So this means representing this total size of the market. So for all 270 listed companies that we have, this is how much the market is valued. So looking at the figures in 2020, domestic market capitalization was posted at 13 trillion pesos. So this was 6.1% lower than what it was in 2019. However, year to date, due to the uncertainties mentioned earlier, this domestic market capitalization went down by 6% year to date to 12.31 trillion pesos. In terms of liquidity, this is actually something that we'd like to highlight. It's a bright spot even during the pandemic. In 2020, our average daily value turnover, so it means it's how much trading is being done in a day, rose by 0.7% to 7.35 billion pesos. So this was higher than what it was in 2019 and also higher than what it was in 2018. Year to date, as of today, average daily value turnover is at 11.04 billion pesos. So this is something that is a bright spot even during the pandemic, even if the foreign investors have been pulling out of the market. So this chart shows you that there are more and more foreign investors that are selling their shares from the market at 128 billion pesos in 2020. This is actually the largest net foreign selling that we've had in PSE history. However, our liquidity, as you can see in the earlier slide, has been increasing. So this is largely supported by local trading. So if you can see in the left-hand side of the graph, there are more local participants now than foreign participants. So foreign investors only account for about 45% of our markets trading in 2020 versus 55% in 2019. So year to date, actually, they only account for one quarter of our daily trades. And then another thing that's interesting to note is retail investments have also been increasing. So retail trading has increased to 26.9% of the total trading in the Philippine Stock Exchange, as opposed to 18.2% in 2019 and 23.1% in 2018. In terms of capital raise, there are more and more um, funds that are being raised in the Philippine Stock Exchange. So in 2020, our total capital raise rose by 2.9% to 103 billion pesos. This is this is much higher than the 100.85 billion pesos total capital raised in 2019. So this means that our listed companies are still confident in the equities market as a capital raising platform. Incidentally, we've also had our largest IPO listing last year, which is Converge ICT at 29 billion pesos. And then we also had our landmark REIT listing also last year. So even amidst the pandemic, our listed companies are still tapping the equities market to raise their funds. This just shows you our listing pipeline. So in the next 2 months, what we can expect is a follow-on offering from 8990. Also, DDMP REIT listing. So this would be the second company to list as a REIT. And also the Cebu Pacific Air SRO. And then there are also a few more companies that signify their interest in listing their REITs. So to name them, it's Robinson's Land, Mega World, Vista Land, and Philinvest Land. So I've been talking about REITs a lot in the past few slides. But what are REITs? These are real estate investment trusts. So this is a type of security wherein it gives the investors the opportunity to buy into a portfolio of income producing properties. So only income producing properties would be allowed to form a REIT. These would be, say, your parking lots, your malls, office spaces, hospitals, or even airports and toll roads. What is good about it is that it gives you, as a retail investor, a steady source of dividends because 90% of the income of a REIT is actually required to be distributed as dividends. Also, the REITs would also encourage foreign participation to tap into the Philippine real estate market. So we have one REIT listed. It's A-REIT Inc., which debuted on the PSE on August 13, 2020. So we're going to be expecting more REIT listings as you have seen in the pipeline slide that I showed you earlier. So here are some of the PSE's initiatives that are more leveraging on technology. It's very apt that the PSE strategic agenda includes digital strategy or a digital transformation. So we started it off with the PSEEC. PSEEC is the Electronic Allocation System, which is an online platform for subscription to primary offerings. So instead of the local small investor going to kiosks in malls or in the PSE offices physically to subscribe to IPO shares, you can now just download the mobile app and subscribe from there. So we've had seven initial public offerings from PSEEC and 35,000 registrants. So what's good about this is because it's online, we can reach out to more and more local small investors, like in 70 provinces and 31 different countries. With the convenience brought about the PSEEC, our average LSI take-up increased to 43.8%. This is as opposed to about 10 to 12% take-up in previous IPOs, which are done manually. So as a phase two of this PSEEC program, we're now integrating an online payment facility within the app and also extending the coverage to other forms of public offerings like SROs, follow-on offerings, and even retail treasury bonds. So we can expect this within the year of 2021. Other digital transformation initiatives of the PSE as a service to our investors would be the new clearing and settlement system. This new system is expected to go live in the second half of this year. And in line with this, we're also shortening our settlement cycle from T plus 3 currently to T plus 2. Another technologically related initiative would be a data analytics platform. So this platform would empower our retail investors to learn and analyze data on their own. Um, we're democratizing the access to market data, which are only typically limited to more sophisticated investors. So our target launch for this data analytics portal is first quarter of 2021. Lastly, we'll also be having an eKYC platform. So this would facilitate online KYC for new stock market clients. This would standardize the process of information sharing between the investors, the trading participants, and the regulators as well. So for the eKYC platform, you just need to download the mobile app instead of having a face-to-face interview with your chosen broker. So it's going to be done through an app, which is more convenient for everyone. Something to look forward to in the near term is the new PSE website. So we actually enhanced the look and the feel of the PSE website. So it has improved user interface and we consolidated the materials and information as well into different categories such as listing, trading, market data, and regulation. The new PSE website would also be having a more adaptive interface. So in whatever mobile device that you're going to use, it's going to be more user friendly and have a better ease of access. So the beta version of this PSE website will be coming soon. Please await for further announcements. And when we do announce, we would appreciate your feedback, and so we can enhance our services better. Of course, our market education initiatives, we're promoting financial inclusivity through our webinar sessions. So in 2020, we've had 15 webinar sessions on topics on stock market 101, investor protection, technical and fundamental analysis, and the like. So for this quarter, we're expecting four more webinar sessions, which we hope you can join. Just log on to our websites that are listed on this slide to register. So, what are our key takeaways for this presentation? So, the COVID-19 is the biggest and most unexpected disruptor in our lifetime. But then, markets during the past crisis have a proven track record of recovering. So, some of the crises that we have underwent before, more recently, the global financial crisis, which took us about 23 months to recover. It's we're always bouncing back and reaching new highs after a crisis. But in order for us to thrive at the present stage into the new normal, having a digital strategy is key. So having everything done online and adopting to whatever the situation is that we have right now, that's the key to surviving this pandemic. So with that, I thank you for your time, for listening, and we look forward to the next presenter in Sir Jonas Ravelas for the 2021 outlook.
Thank you, Mika, for that very informative presentation. Thank you for giving us a recap of what happened in the market back in 2020, the pandemic year. And indeed, a very extraordinary time for the market. And of course, very interesting presentation too, as you shared the things to look forward to. You know, our initiatives here at the PSE, very technology driven, especially during these changing times. So, I guess we've seen 2020, and now there's 2021. What lies ahead? Something to look forward to for the market, and of course for the economy also in general. Um, Let me introduce our next resource speaker. Hold on. There. So our next resource speaker is, sort of a local celebrity when it comes to the market. He is the first vice president and chief market strategist of BDO Unibank Inc. He provides analysis on financial markets and macroeconomic developments in local and foreign markets. He has been educating investors in trading strategies and corporate governance, having worked in the financial markets for more than 20 years. His success mantra is something that I really like. Fortune favors the brave. To give us his outlook for 2021, please help me welcome Mr. Jonas Ravelas. Good afternoon,
Good,
sir.
a- good afternoon. Good afternoon, everyone. Let me just put up my slide and I'll directly proceed with my presentation. Okay. So the title of my presentation is Steering Towards Recovery. So this is eventually an outlook that actually should help us at least, so to speak, give us a better view of 2021. So without further ado, let me just skip this forum reminders and go directly to the presentation. So my key takeaways, I guess, is that 2021 will be remembered as a recession year. Yesterday's GDP numbers of a negative 9.5% highlights that we're actually on the road to recovery. If you remember, we came from an 11.4% contraction in the second quarter. We ended the year at around negative 8.3. So we're slowly working on a sort of on the way to recovery at the moment. So the prospects of full recovery remains uncertain, but dependent on a few things, such as the state of the COVID infections, the potential rollout of vaccines uh, in the country, and of course how we do with the fiscal spending. So this is eventually why we think the Philippine economy is poised for a rebound in 2021. So I guess the first thing to look at is eventually come up with a starting point or sort of roadmap of where we are. Uh, Eventually, the first thing that you have to look at is that coming from what Mika's presentation in March, that we eventually COVID entered the Philippines. From an emergency room, we are now currently in a stabilized position. We are still in intensive care, but we are eventually in a stable condition. What we want to eventually achieve is slow recovery, moving towards a private room and probably heading towards getting out of the hospital. And that eventually entails three important things. One is effective pandemic management. The second is eventually fiscal spending. And the third is eventually building confidence. And when we talk about confidence, this is where we get to see a lot of these issues for the stock market. So at the big picture, you will notice that I've actually tried to uh, put four columns or four boxes to just give us an idea of where we're going. So let's talk about the good news. So what are the good news? There's been an uptick of mobility here in the Philippines. We're slowly trying to bring down restrictions. Remittance and the BPOs are still here. They're still spending for our economy. We've accelerated in digitalization. Vaccine and external demand remains. And eventually, the US eventually has a potential 1.9 trillion spending. And that, assuming gets executed, that will be beneficial to the rest of the world. Now, when we eventually look at the impact of the pandemic for the Philippines, is that it has derailed the momentum of practically all economies, not just most, but all. Eventually, COVID has eventually created two shapes of recovery, which is the K shape, so an uneven recovery. Some are rising, such as the US, China, while the rest of other countries are still languishing, just like the Philippines and other Asian economies. There have been growth in industries such as e-commerce and ICT, while industries such as tourism, restaurants will take time to recover. Now, when we talk about the vaccine, there seems to be a lack of trust in the vaccination program. And I'm just only talking about the Philippines. Pulse Asia says 47% of Filipinos would not get themselves vaccinated. And this eventually stems from the Deng Vaxia case a few years back. So the government eventually is planning to target between 50 to 70 million Filipinos in 2021. So there's a real need for an information campaign on the vaccine. Now, let me share my worries. More infections and stricter quarantines are still there given the new variants of COVID. The lack of domestic demand as mobility remains a bit tight. uh, Risks of not further fiscal spending could eventually create uh, a more permanent scarring on the economy, which means if we don't spend, our economy will just remain stagnant. It's just like thinking that the Philippines is caught in one endless traffic. And eventually, right now, a lot of economies are doing their best to get out of this K-shaped recovery, which means an uneven recovery. So eventually, just to show you some of the vaccines, like in the Philippines, we've seen the approved. We've seen a lot of improvements that we've seen here. Pfizer, Moderna in the Philippines. We've seen the for emergencies. We've identified. We are able to use the AstraZeneca. So eventually, this is the same slide, but just showing you the abandon of around three. And eventually, this is, I think, a very important slide. Just highlights the more important impact of how we flattened the curve. So the blotted blue line is the Philippines. And if you look at the comparison over a 5-day change, the Philippines has really improved. No? So the fear is that whether this rise that we're seeing is just the beginning. Now, if we look at the Philippines on the chart to your right, you will notice that we're still seeing the Philippines relative to our peers uh, still able to uh, sort of still have mobility restriction, particularly for transport. And this is something that we need to restore so that jobs can eventually come back and eventually business activity. So we need to normalize the transport sector. Now, comparing where the number of daily cases into our stringent policies, you'll notice that we're currently at a threshold of an average of 2,241. So it's just a question whether are we able to keep it near the lows, and these are levels of June, July of 2020. So if we are able to keep it this way, I think uh, hopes of further reopening the economy is there. Now, how did the pandemic change the world? So prior to COVID, we were looking at a 6% growth. During COVID, we've now seen a negative 9.5%. And eventually, looking forward to 2021, we're looking at an at least 6.6%. On the better side, we're probably looking at a 6.9%. Now, of course, when we're faced by the headlines and looking at the headlines that you see in front, it's so difficult to probably say that these are the headlines over the last 3 days. And again, it's very difficult to probably say that we're out of the woods. So the big drop today still highlights the market's fragile investor confidence. So, what does that mean? It means that investors are willing to wait for more clues to support that we're indeed on the road to recovery. So, one of the things that people will eventually look at is, or investors will look at, is earnings. People will want to see what happened to fourth quarter earnings. What are the prospects for 2021? However, if we were to sum it up, there's a ray of sunshine, but clouds remain. So this is how our outlook for 2021 looks like. So vaccine hopes are there, but there's a lot of things that eventually still remain unanswered. So if we talk about the vaccine, how will each and everyone be vaccinated? How will it be distributed? How do we keep track of those that have been vaccinated? So we need to do a lot of preparations to be able to execute this. Now, a typical vaccination program would probably take 1 to 3 years. So the reality of trying to organize one will take time, especially after what happened to Deng Vaxia, that 47% of Filipinos are afraid to take the vaccine. Now, the global recovery path, and again, this is just a repeat of what I said earlier, the three important things, uh, the containment of COVID-19, which eventually boils down to an effective pandemic management. Second is the fiscal support of government. Last year, we've seen the central bank doing a lot of heavy lifting. And the third and the most difficult part is building confidence of both business and consumers. Okay. So, what are the short term drivers that people are looking at? I might sound like a broken record, but this is eventually what drives the market from the lows in March of 2020 to the present. It's the development and distribution of the vaccine, an effective pandemic management, and eventually government support. For the Philippines, 2020 was a year for the central bank. They did a lot of heavy lifting. They brought down interest rates. They've eventually provided more liquidity so businesses could stay afloat. They've eventually provided a lifeline to the national government. Hopefully that they'll be able to further thaw the economy and have it restarted as soon as possible. Now, when it comes to the long-term drivers, due to the present situation, there's been an increase of inward-looking policy, which means I will think of my country and people first before others. The second is, and I think this is something good long-term, a policy push for greener economies, which means there is now a need to do more of protection of the environment, social and corporate governance initiatives that would eventually provide a lot of changes. And the best way to see them are more of renewable energy. The other ones that could eventually provide a shift is eventually geopolitical realignments, especially now that we have a new president in the US, and what would be the theme between the US and China, and eventually the embracing of technology. Hopefully, the transformation that we're seeing because of technology will not uh, eventually affect jobs. But let's face it, the reality of being replaced by automation is there. So, again, looking at the upside of all of this is primarily driven now. Again, earlier, we're talking about the early distribution of the vaccine. This is the upside for most of the developed economies. And once they're able to normalize, they'll be able to resume their lives, especially in US and Europe. But of course, at present, the virus resurgence are required repeated lockdowns. And this is a challenge for the US. The second is the continued sizable fiscal and monetary support. So these are the risks that most of the major economies, including the Philippines. So the risk to us is the impact of inflation. As the global economy reopens, demand for oil rises. So this is another thing that could eventually have an impact for the Philippines, higher inflation. Positive spillovers from faster than economic pickup in the likes of US, China. So with the $1.9 trillion, that is expected to benefit the rest of the world. Hopefully, it should take out the high long-term unemployments and eventually discourage political discontent. Now, hopefully with the US and China relations having a potential reboot, hopefully a resolution of the trade disputes. So if these things materialize, there's less things to worry in the global front, and brings us to a much better and recovery moving forward. Now, if we look at where the US is, which I've already mentioned, the 1.9 trillion, the 10-year US Treasury, which represents their long-term interest rate, have started to rise, and primarily driven by uh, the blue wave, which means the Democratic win of Joe Biden. So this is something that is good for the world, and eventually, over the long term, good for emerging markets. Now, when we look at the Philippines, there seems to be a fragile recovery that is there. So moving forward to 2020, um, there seems to be that potential um, effect for the Philippine economy. So I guess the budget that people are looking at is primarily driven by hopefully the fiscal spending coming from government. The risk of inflation could eventually keep interest rates flat, so to speak. So for us, what is important now is the delay in the risk is the delay in the vaccine, delay in the infrastructure spending, and eventually higher inflation. So these are the things to watch. Now, what are the long-term strategies that is good at the present? One is lower for longer interest rates. So for listed companies, uh, they're extending their maturities and eventually taking advantage of the market to further increase their funding so that they can move on and do their expansion plans. The prospects of economic recovery and reopening should benefit the property, transport, and banks. Plus, the strong peso is a good opportunity to buy dollars, especially as importation is expected to recover. Now, the life after COVID eventually creates a new set of markets, which is good for IT BPO, uh, technology, uh, health consciousness, so basically having healthcare to generate new business opportunities. And of course, environment, social, and corporate governance investments. Now, what would eventually trigger the economy to move closer to 6.9 is that we're able to fast track the immunization process. And I think the ideal timeline is between third to fourth quarter of this year as the beginning. And that is actually a good. The recovery of business and consumer sentiment. So that is another thing that we need to be able to address, and the long-term changes affecting us after the pandemic. So these are the things that investors worry about. And I think that's also one of the reasons that we've seen that close to 4% drop week on week. So on a year to date, I think we're down by roughly 6%. So let me show this in a chart. So I guess what is important at this point in time is to eventually see the government spending first. This is an issue about trying to restart or restore confidence. As individuals and businesses, because of the restrictions, it's very difficult to see as individuals to continue to spend as if it was normal, because risks that probably tomorrow your job might not be there. There are certain sectors that remain vulnerable, and tourism is one of them. Now, but if we were to expect spending coming from the government, particularly for infrastructure, it goes down the line. It eventually goes through the whole system with the support of the central bank of keeping interest rates low. Construction companies, infrastructure could eventually attract foreign direct investments to the country and eventually restart the economic activity. So this is what we're hoping that the government will do first. Once people see government spending, jobs are being created, then definitely the reluctance of individuals to spend will be gone. So with business. This is what we're trying to expect the recovery to be. Now, so far, in terms of what keeps the market very positive in terms of the outlook, is that you have sharp declines in COVID cases from at its worst. The government continues to pledge the stimulus and eventually further reopening in the economy. So this is where I think the medium-term view remains. Now, as we address the challenge of the global economy, is that you're seeing more of fiscal spending and eventually the embrace of technology to support the recovery. Okay. So inflation continues to be a challenge for us. So the risks as we move forward to 2021 are caused by the higher food and transport prices. So I'm just sharing with you what I think. I am looking at January inflation to be at 3.6%. So again, the impact of the fourth quarter typhoons and eventually the impact of the African swine flu remains. So that can still keep inflation elevated. Okay. So what does this mean? It means that we'll have to rely much on the government spending rather than monetary policy to help restart the economy. As consumption eventually has slowed down from the second quarter, but has slowly recovered. And what we want to see is the sustainability of this, thanks to the resilient flows of remittances. So they're just down by 0.8%. And what is important about remittances is that please pay attention on the dotted red line, because that is 2 billion average of remittance every month. $2 billion. So that will eventually keep spending afloat. So despite the fact that the peso has appreciated by 0.21%, our economy is still strong despite the crisis. Now, Right now, this is as of the other day, so we're down by 3.69%. But we've since recovered from 8,000. So naturally, uh, investors continue to look at the Philippine economy with renewed optimism. But of course, with the recent set of data, people again are waiting for more clues to the economy. So what are the shape of economic recovery that we're seeing in certain sectors? So for the V shape, that's food and agriculture, health and wellness, IT infrastructure, digital industry, and the education sectors. Okay? So these are the shape of the recovery of that is benefiting from the present situation. Those that are moving in an L shape, which has dropped and probably continue to have slow, is travel and tourism, with the exception of domestic travel. Once we further eased our um, sort of pandemic management policies, we're able to have more domestic travel. If we're able to do that, then that will help further restart the economy. Transport and automotive sectors, that will also be in a challenge, along with malls and retailing, the dine-in restaurants and public entertainment. So until such time that we get to see more clearer pandemic management remedies, then we will see this type of recoveries. Now, if you've invested yourself since 2008 in the stock market, if you've invested 10,000, you still made close to 11.75%. So which means of all the investments that you can do, a time deposit, bond, or a stock market investment, the stock market is still your best game in town. Okay? So this is despite the pandemic when the index fell to uh, 4,000. Okay? So this, again, despite the drop today and 4% this week, there are still leaders in the recovery. And of course, if you are buying in the equity market, do you want to buy near the highs or do you want to buy near the lows? If I were to interpret what happened today, suddenly the Philippine stock market just had a sale. Imagine that this could be a 3-day sale or a 3-week sale. And eventually, this, if we're looking at further recovery of the economy, definitely telecoms, consumer staples, and banks are actually good sectors for now. Mainly because we are still in the pandemic stage, which means we need to be technically or technologically connected through telcos, consumer staples of essential goods. We all need to survive. Banks are eventually a proxy of the economy. Remember that banks eventually are the ones that bring money from one place to the other. It's like greasing the whole economy. If money is there, then businesses are to be transacted and made. So if you're really betting for a recovery, then the banks are a good starting point. If you are looking at 5 to 10 years down the road, definitely the recovery in real estate, infrastructure, and eventually the retail sector is eventually abound. So, of course, what are our long-term opportunities and challenges? So, of course, the demographic dividend is our opportunity. The Philippines at the heart of the dynamic region called Asia. We have so much natural resources and the faster growth of regions outside the capital region. So what are our challenges? And this could be opportunities. Low agricultural productivity, shortage of technical skills, high electricity rates, and eventually the impact of calamities. So if we take technology for uh, agricultural productivity, then that is another sector that we need to go. Remember, we're a highly populated country of over 100 billion. So these are eventually showing you the growth of our country in 2019 that is growing above the annual average of 6%. So it's not only the national capital region that's growing at 7, but even other countries in the region. That's why, despite the uh, storm affected area Bicol, they were still able to do a 7.4 in 2019. Davao grew by 7%. Ilocos grew by 6.9%. Why am I sharing this with you? Because what this means is that the regional GDP per capita per region continues to grow, as most of the economy are growing higher than 6%. So this is now a challenge as we see more of the rest of the economy growing faster than uh, the national capital region. Then this is a good sign that growth is not just concentrated in one area. Okay. So as we build the future of the Philippines, it's driven by government's top priority, which is building infrastructure, developing social capital, and opportunities to seize. This is the shortcut version of the 10-point agenda of the president. So agriculture, tourism, manufacturing. So in June of this year, he amended his 10-point agenda by still focusing on infrastructure, the move of government to digitalization, and eventually the shift to online services of government. This has become part of their top priority to address a COVID-stricken country. And of course, hopefully we'll able to kick in agriculture and manufacturing. So agriculture, infrastructure, IT, BPO, and manufacturing are the key sectors that government thinks that will be able to help create jobs, bring in foreign direct investment, and hopefully help recover the Philippines as we build back better the Philippine economy. So just like any business, retrofitting the business is like thinking out of the box. So the nice thing about investing in the stock market is that they are not static. They're very dynamic. So having a change makers playbook, which means given the present situation, companies that are able to survive, pivot to the new normal, and eventually repurpose their assets are the ones that will eventually benefit. So a good example that we've seen are the BPOs. They were able to work from home. And to certain extent, thanks to technology, we're able to do a lot of retail business. You don't have to get out of the house. You're all doing it over your phone, over Viber, WhatsApp, Lazada. So all of these things are eventually still creating a lot of activity for the economy. So let me wrap it up by saying what now? What should you do as individuals? You might want to stay liquid for near-term requirements. So looking for that opportunity to get into that stock market, which may have happened. Although I think the risks are still looking towards 6,500. So keeping a short duration if you're in bonds. Uh, Businesses take advantage of the low interest rates to extend maturities. And as Mica mentioned earlier, there are a lot of clients that are looking to tap the capital markets to widen the source of funding. So for investors who are really looking at 5 to 10 years down the road, look into banks, consumer stocks, telco, with eventually intact growth numbers. I guess what we want to look at is that we are still growing as an economy uh, moving forward. Once we're able to get out of this pandemic and we're able to have the vaccine, definitely we will be on the path to recovery again. So just like a virus, the patient will start recovering, although the impact of the virus will still be here for a while. It could probably be between the next 3 to 6 months. And I'd like to end this by showing you where the emerging markets index is. So what you have here is a chart from 1988, 2002, 2009, and 2019, highlighted sort of pandemics, SARS, swine flu, and COVID-19, after which the market eventually rallied. So this is something that has created a lot of activity. So let me just wrap it up by showing you my forecast. So I'm looking at rates to remain flat from the BSP. I'm looking at the peso to probably end the year at 49, coming from 48. My stock market target at least is 7,600. So coming from the present level of my range of 6.7, although now that we're at 6.6, the next support that we're looking at is 6.5. So maybe closer to that 6.5 will be a good opportunity to accumulate those stocks. So what now? How do we ride the next wave of disruption? Appreciate our resources. Look into your accounts. Look for money to spare. It doesn't have to be big. What you just need to do are regular quarterly or yearly investments that you'd probably want to do. If you don't have an investment mantra, let me share mine. There are only three. Invest in assets that will appreciate over time. Invest in assets that will give you a recurring income. And eventually, uh, invest in a jackpot, meaning invest probably in a stock, a land that will probably appreciate over time. So you don't have to have so many stocks to watch. You just need maybe 1 to 3 that you're comfortable. You can buy one that is just for a long-term appreciation, one for a dividend yielding stock, and maybe one speculative, maybe a stock that would be the next BDO, the next SM, the next Ayala. So these are the things that you want. Now that you know the risks ahead, it's still going to be a bumpy ride. We just have to keep on investing, look for bargains. As consumers, we need to spend more, but wisely. And I guess the most important tool that I have and is to pray harder. This is what we need for all of us. Hopefully, the COVID-19 will eventually be out of our hands. So this is my last slide. Thank you for your time. Good afternoon.
Thank you very much, Jonas, for that very insightful presentation. Thank you very much to our guest speakers, Mica and Jonas. And of course, thank you to our participants for investing your afternoon with us. I'm very impressed. Our attendance rate is so high. Over 500 participants combined in Zoom and Facebook. So if you want to get in touch with the PSE Market Education Department, our contact details are on the screen right now. For corporate information, please visit the PSE website at www.pse.com.ph. For disclosures, it's edge.pse.com.ph. For investing materials, it's pseacademy.com.ph. Join our online community. Follow us on Facebook, Instagram, Twitter. And of course, if you missed our webinars, don't worry. The recorded versions are in YouTube and Facebook. So our YouTube channel has a wide range of webinar topics. All you have to do is visit our YouTube channel. It's the Philippine Stock Exchange Inc. Of course, if you are not yet following us on Facebook, do follow us on Facebook and click the subscribe button so that whenever we go live, you get notified. And thank you also, Mica, for plugging our lineup of webinars for the quarter. So we have 4 more webinars for you, 2 webinars in February and 2 webinars in March. So next week, it's myself and Attorney General from the Capital Markets Integrity Corporation, Back to Basics. Let us know your thoughts. We want to know how we can continuously improve your webinar experience. Kindly accomplish the evaluation form after this session. The evaluation link is in the slide. And with that, this is John Garcia. I'm your host. Thank you, and I'll see you again next week.